earnings, and it sort of has a strong store of value. That's how it's perceived. Of course, it also has limited capacity. Alchemists in the Middle Ages tried but failed to create gold out of other materials, and people see it as a hedge against inflation. Is it really a hedge against inflation? Look, when you saw inflation rising, gold was falling. And that has a good reason. We'll explain that later. And when interest rates began falling, gold had its biggest rally and reached new, all-time highs. The reason gold suffered a blow in the US elections is because Trump promised tariffs. Okay? There were other reasons, but tariffs mean higher inflation. And another reason that gold is seen as a safe haven is because many people say it's a safe haven. So there's fear of missing out. People jump on gold. So again, it works as a safe haven if people believe it. And as traders, you should just make the trend your friend. So is it a conspiracy that gold is rising or falling? Is it justified or not? Well, if there's enough demand and not enough supply, the price rises. If there's too much supply and not enough demand, the price falls, okay? And we want to take advantage and take some of that move. So gold is a safe haven, or perceived, or works best as a perceived safe haven when we're talking about issues in the Middle East. So over a year ago, Hamas attacked Israel, October 7th, 2023. Gold jumped because it was a surprise. Nobody expected that and threatened a bigger war. It, of course, advanced each time the fears of a wider conflict emerged. We had Iran attacking Israel and the other way around, and you name it. And gold lost ground each time things seemed a bit more calm. Okay? So the last example is when Israel attacked Iran, I think quite strongly against military targets there. But as it was limited to military targets and did not reach nuclear or oil installations, things calmed down. Okay? Here is what I see as the most important factor for gold. So gold is perceived as safe. So it competes with other things that are considered safe. Let's say US debt, the world's the safest, okay? So how does it work? When 10-year treasuries, which are the global benchmark, when they rise, they give a good competition to gold. And gold falls because if you buy gold, you need the price to go up. But if the price doesn't go up, you don't get any return. While with treasuries, you get the yearly coupon. And also another factor to say, well, the US government might not be able to pay its debt forever, right? Maybe we've got some credit rating downgrades, right? But so far it has never defaulted on its debt, and never. And investors are already used to the risk of some kind of a debt ceiling crisis, debacle. Now that the Republicans have full control of the House, Senate, and the White House, I don't expect any debt ceiling or government shutdown issues. Okay, so one thing to know about moves with gold and yields, again, they're inverse. There's an inverse correlation. When yields fall, gold rises. When yields rise, gold falls. But the moves need to be significant. Significant moves, and we're not talking about extreme rare moves. We're talking about reactions to data. I mean, things that are more than 1-2 basis points in yields, not these jittery, choppy fluctuations. We're talking about the bigger ones, 10 basis points. And these happen almost every day. Okay, so there's an inverse correlation. And we can use the reaction in gold as an indicator to see, we can see the reaction in gold. We can stay on the sidelines and observe it and then decide on the next move. So we're talking here about when gold rises with yields, that means gold defies gravity. There's lots of demand for gold. Gold is strong. And when gold falls with yields, then gold is weak. So when this correlation, this inverse correlation between gold and yields falls apart, then we know that there is either demand so strong that gold doesn't want to fall, even if yields are rising, or that gold is so weak that even when yields are falling, it still falls. We can use this information later on. Okay, next topic is more Well, long-term, de-dollarization. We saw this beginning back in 2012 when the price of gold was around 1,100, 1,200, 1,300, half the price it is now. I don't know if any of you remember those days. The Reserve Central Bank of Russia, the Russian Central Bank, took advantage of it and began accumulating gold. Then came 2014, the first Russian invasion of Ukraine, and Russia knew, okay, we have this fortress of gold just in case. This accumulation accelerated, and Russia did a lot in that field. And it's not also Russia. We had China and India also diversifying away from the US dollar and buying gold as one of their assets. China wanted other countries to use the yuan, but China is not that much trusted. And things have accumulated enough that it's already significant, the amount of gold that Russia has. I mean, when it came to its full-scale invasion of Ukraine in 2022, it already had something like $67 billion. And of course, more in rubles, and the price since then went up. So when Russia invaded Ukraine, lots of its dollars were seized, and it relied on gold. So far, as far as I know, it didn't sell a lot of that gold in the process of accumulation of gold by other countries, and Russia increased. Okay, so I expect these countries, China, India, and Russia, to continue accumulating gold slowly, bit by bit. So it's a long-term factor impacting the price. So you have immediate short-term reactions to news and long-term reactions to the accumulation of gold. So far, this trend has been going on and on. Now, if you trade gold and you're in the market for a long time, you probably have your eye on other commodities. Let's talk about silver, sort of the little brother, little sister. One interesting phenomenon you should be aware of is the gold-silver ratio. When it reaches extreme highs, it's usually time to buy silver. So when gold is worth that much more in percentage terms or over silver, that means that silver is undervalued, and it's usually a sign to buy silver. So it's worth observing, seeing if it works for you, and if you want to go for silver. I know some of you trade silver. And gold and oil are also correlated, but usually only around geopolitics. So they don't behave as sister, brother commodities. They just react to the same reasons. So I ask, why is oil rising? Why is gold rising? Usually the Middle East. Okay, so when there's a danger that the war would escalate and the Strait of Hormuz will be closed, and that's where oil comes out from, then that's when gold kicks in as a safe haven, and that's when oil rises, because if you don't get oil exports, a significant portion of them from Saudi Arabia, Bahrain, Qatar, United Arab Emirates, Kuwait, Iraq, and Iran, then oil prices rise. Okay? Here there's a better correlation, which also makes lots of sense. So some companies extract gold out of the ground, and these companies make more money when gold prices rise, right? But these companies also extract other metals, such as palladium, cobalt, and used in electric cars, used in other things, rare earths. So if other metals lose their shine, then these companies won't do very well, even if gold prices rise. So it can serve as a proxy to buying gold, but not always the best one. Okay, and let's talk about timing of gold. So let's start from the more interesting part, but perhaps least significant. The happiest part is that when in India, it's custom to give gold as a gift, not only in India, also in China and other countries. And there are wedding seasons or specific dates when couples get married in India. I must say I'm not very aware of all the details of this, but you can look up in Google, see which dates are specific dates for getting married. And towards these dates, price of gold has a bit of an uptick, okay? So usually you can see the price rising towards these specific dates and then falling. But you have to have everything else equal. That means no big news event in markets or that moves gold. The other factors are more important. Another thing is that gold falls in response to the seasons. Why does seasonality work? Just because it's just statistics. So usually in the autumn, I mean here in the northern hemisphere, the price of gold tends to fall. We haven't seen it this year. We did see it after the elections. That was already the middle of the fall. So autumn or fall begins officially September 21st, and on December 21st, we had gold rising very nicely until the US elections, until November 5th, then falling, then rising again. Once again, there's stronger things pushing gold, such as new policies by the American administration. And looking at days of the week. So we have a U-shaped week. There is a phenomenon. Again, it doesn't happen all the time, but it's something to be aware of, something worth observing. I'm hopefully giving you some food for the thought. We have a U-shaped week. So gold finds its lows on Tuesdays and Wednesdays in the middle of the week and then rises. So gold begins the week high, falls in the middle, and then rises again. Let's see if it works this week, which is relatively quiet week in markets. We have Thanksgiving. And around hours, of course, there is gold moves around big economic events, right? Like other currencies. So when you have a release coming out, let's say at 8:30 Eastern time, when US data comes out, which is also 1:30 GMT in the current times. So there is some action in markets, sometimes regardless of the outcome. So if there were buyers on the sidelines waiting to buy gold, just waiting for the data to come out, they could buy gold regardless of the data. If the data is strong, it means that yields are going up. Gold could still rise, at least in the short term. So the release of data points can trigger some short-term action. And watch the openings. So Tokyo, London, and New York all are big openings when traders jump in and move markets. That means they move gold as well. So it's also something to be aware of, something a bit more general, not only exclusive to gold. And that's it. That's what I have for you, everybody. That was a bit shorter. I spoke a bit fast. I think that for some of you, it's not the first time, and it's because, well, I've surely repeated this. Last time I did this was just on the day of the US election, so 3 weeks ago. But since then, the price of gold has moved, which makes every webinar just a bit different. Are there any questions? What I would like to know from you is what do you want us, the analysts, to talk about? So do you want to know more about a specific commodity? Do you want to know more about technical analysis? Do you want to know more about fundamental analysis? We have some ready-made webinars for you, and we can always prepare new ones for you to learn. Okay, this has been, I see one person asking a question. So I'll wait for that. 2 people. Let's see if it's a question or just thanking me or throwing tomatoes. Do you plan to include some stocks in the analysis? Well, we haven't done a webinar on stocks, on indices. I'll gladly do something on that. But if you're asking on specific stocks, well, you can ask us on Ask Our Analysts, and we'll gladly analyze that. Now, we have knowledge of the bigger stocks, of course, and we can do technical analysis for any chart. But if you ask us about the stock that we're not familiar with, we'll do our best to answer. And that's it. The best indicator setup or strategy that has always worked for trading gold. First of all, no strategy works forever. So you have to design it yourself. But I would say that with all the demand, everything I've been talking about, then these buy the dip strategy works best. So look for those pullbacks to the downside and see if you have there a confluence of indicators that you like. I don't know, Fibonacci lines, Bollinger Bands. Look for something technical as an entry point and think of the fundamentals as being generally bullish, at least until things change. So even the big fall that was in response to the US elections, if you zoom out enough, and well, not that much, then you can see it as a buy the dip opportunity. Okay. Regarding the Black Friday offer is available on our applications. We had some issues with the website. So if you download the applications, you can see the Black Friday offer over there. We're fighting to get the offers on the website as well. I know that for some of you it's more comfortable. Why are gold and USD sometimes rising, falling together? It's a good question. So US dollar and gold rising and falling together, that can be out of several things. So let's talk about rising. When the world is in trouble, then you can see money rushing into the US dollar as a safe haven, and expectations that that the world is going to suffer. The US economy is suffering, but it's going to affect the rest of the world even stronger. So in such a case, we expect the US dollar rises as a safe haven, but the fall of yields pushes also gold higher. We're not in such a phenomenon. We're in US growth, which means that higher yields mean a weaker price of gold, and lower yields mean higher price of gold in general. But that's one area where it can happen. Another thing is if things really go badly in the Middle East, then once again the US dollar is a safe haven, and gold is also perceived and works in such cases as a safe haven. But but I can have cases where the opposite happens. So when we saw inflation falling, the US dollar dropped because rates are expected to go down, and lower rates mean a higher price of gold. And when inflation was rising, it hurt the price of gold. So and pushed the US dollar higher. Again, there are open various scenarios. We are here to help and analyze the situation. In most cases, there's an inverse correlation between gold and the US dollar. Another question here is there anyone on the team that can educate us on a top-down analysis? What, I must say, I don't know what you're referring to. Can you elaborate a bit more on that? In general, if you refer to top-down, I would say the top is fundamentals and the down is technicals. So if the bigger picture is fundamentals and the entry and exit points are technicals, but I don't know if that's what you're referring to. In general, I think it's always better to trade with the larger trend than to go in the opposite direction. But people make money going against the trend, so I wouldn't rule that out either. Okay, any additional questions? I'll invite you to the next webinars. So Ross will be doing a webinar on the 3-day setup and signals well, actually tomorrow, Tuesday, at 5 p.m. GMT. And I will be repeating actually this one, which is a popular one, on Thursday at 3 p.m. GMT. But if you all tell me you want me to talk about something else, I'll gladly do it. Okay, that's a sign for me that there are no more questions. Either everything is clear or you're all confused, or just that's it for today. So thank you very much. Let us know if you have any more stuff. If you have any more questions, we intend to run a survey among you all shortly and get to know you a bit better, what you trade, what you don't trade, your styles, things like that, so we can better. Maybe I'll do a short question right now, just before I go. Do you all prefer video or text content? Do you prefer reading or seeing a video of somebody speaking in charts and things like that? Guess I should ask that. Well, yeah, okay, 2 voted for video, but it's not that surprising because we are on video. But we'll run a proper survey. But in general, I see that people around the world and all social media, they like those short videos. So that's the direction we are considering, including more of those. I know Russ does that. Video, but with recording available. Keith, if I'm not mistaken, you're based in Australia, right? So I assume that's the reason you prefer video. I mean recording, because Malaysia, right. I got confused. Well, in a very different time zone than mine. So, yeah. Okay, so that's it. Well, GMT plus 8. Yeah, I'm here at GMT plus 1, so 7-hour difference. So it's the middle of the night for you. Well, very late evening. Anyway, so thanks everybody once again for coming and for your questions and comments. I'll be here again. Ross will be here tomorrow with the webinar, and we're always available on Ask Our Analysts. So thank you and goodbye.